Yeah. Okay. Yeah, and it looks to me like we're live. So thank you very much, Andrew, for taking the time out of your day to kind of come on and talk about the exciting topic that is bounce back loans. How are you today?
I'm very well, thank you very much. I've been bouncing back all day long. This is one of those popular topics, and I'm looking forward to kick-starting how things go forwards from here.
I think it's going to be a very popular topic for a couple of weeks yet, until everyone's managed to get their hands on them.
Yeah. Well, the thing I sort of take from this is in Rishi's initial statement, when he made the announcement about these bounce back loans, what he did say is that the loans will be available until lockdown lifts. Now, none of the terms and conditions actually cover that, but working on the intent that he had, there is almost a little bit of a sense of urgency for people if they're interested in this. And that's not me trying to encourage you to take out loans. It's me stating a fact that has been said by the Chancellor of the Exchequer.
Yeah, absolutely. So I know they mentioned, so the reason some people was under the impression that it was November, because he kindly kind of said, if you under C bills, you can refinance that or move it over to a bounce back up until, I think it's the 4th of November.
Yeah, I think what that was is because this loan had been in the pipeline, they'd been negotiating with the banks for 6 weeks. So they knew about this, the banks, and that's probably a reason why the banks were not too pushy about getting C-bills out there. And a condition came in that on launch date last Monday, they moved the threshold for C-bills to £50,001, and BBLS came down to under 50,000. And now they've created this pathway to migrate over, because the C-bills was not on as preferential a terms as the bounce back loans.
Yeah.
So there's that pathway, and that is open until the 24th of November, not the scheme itself generally. That's the date to which, if you wish to, you can port over.
Yeah, so for anybody who's, if lockdown ends in 3 weeks, or kind of whichever date Boris decides, they've already announced their intention, so people can't really be angry or kind of feel left out, because they've said it's until lockdown ends. He said that during his speech, so it's just a case of getting in there now and getting an application in if you do want that money.
Absolutely. I couldn't agree more, Josh.
All right, perfect. So in terms of kind of the application process, I know you've applied for a couple. How have you found it with the banks you've gone through?
Each bank, they have a core theme, which is the core questions, but each bank has its own quirks. Some are very fast out the blocks. I got an application in at 7 a.m. on last Monday, and I had the cash in my account by around 10 a.m. the following day. So that was lightning quick, and that was the Lloyd's HBOS group. And Lloyd's seem to have been very proactive and have their systems well oiled for making this work. Other lenders have been a little bit different. I mean, the co-op I did last Thursday, I think it was, and that was, I had to download a paper application form, print it out, write it, scan it, and then email it back to the bank. Modern. Yeah. So each lender is very different, and they have their own processes, because you're entering a contract with that lender, so you have to fit into their lending policies and criteria.
So have you applied for Starling yet? So have you, I know you
mentioned... I did apply yesterday, and we had an approval yesterday evening to go in and sign the terms and conditions. And that tended to be the most lengthy of all the terms and conditions that had been put out there. So I was like, oh, okay, that's interesting. And I did have a good read of it, being the diligent accountant that I am.
Yeah, I also applied to Starling. So yeah, I think it's 12 pages. So it's not a bad read. It's quite easy. As far as the contract goes, it's quite easy to read, I'd say. So in terms of the criteria, so you essentially, would I be correct in saying that there's kind of two criteria you need to meet? So you need to be eligible under the bounce back loan scheme set out by the business bank, and then you've also got to be mindful of the actual bank, the person who's giving you the money, their terms and conditions.
Yeah, well, let's go back one step. The British Business Bank, they defined the terms, the global terms for the scheme that is administered by the banks. Now, the British Business Bank delegate then to the individual banks to put into their terms and conditions what it is that those loans are to be used for. And your contract is directly with the lender to which you take the loan out with. So the British Business Bank gives us an umbrella so that we know, whilst the loans are being formulated at the lenders, roughly what the framework will be. But what you're bound by is the actual terms and conditions of that specific lender you applied to. And each lender is very different.
Yeah, so in terms of kind of the permitted use and kind of what the money can be used for, so are there any restrictions around what that cash can be used for? I suppose it depends on the lender, but what restrictions have you seen?
Yeah. Well, all of them basically require you to basically use it for the business, for either working capital, investment, or economic benefit, or to repay an existing loan facility. Now, I was actually quite impressed by the Starling one, and we were talking a little bit before we came live about the fact that Section 2, they cover purpose, and 2.1 is the borrower uses it for the authorised purpose only. Now, most of the lenders have not actually put definitions, and down below in Schedule 1, they've put what the authorised purpose is, and they've detailed it's for working capital, it's for investment, it's for economic benefit for the business of the borrower, or it's to refinance an existing loan facility that you've got. And they then say in 2.2 of their purpose, Starling is not obliged to monitor or verify how you use this loan. So that they're effectively asking you to self-approve yourself and then asking you to self-monitor yourself. It's slightly quirky.
Yeah, it's almost a risk of something bad happening with these, isn't it?
Yeah, totally. So I was perplexed by use it for the intended purpose, but we're not actually going to check on you. Okay, well, that's slightly weird. That's really weird and loose lending, almost carefree lending, pre-2008 lending.
Yeah, almost. Yeah. So in terms of kind of the authorised purpose, would you say, so if I got kind of a couple of questions, it seems to be a recurring theme is essentially, can I use this money to buy a property? What are your thoughts around that?
It's an interesting one. It depends on what your business is. Now, if I looked at the co-op's terms and conditions, which is different again, the co-op say any business in any sector can apply, except if you are a bank, an insurance company, or a public sector body. Therefore, they are not precluding anybody in the property trade. Starling haven't defined who can and can't apply, and basically, you can therefore use it for a property business for an economic purpose, working capital investment to generate profit from, or to refinance off more expensive debt. Therefore, a property investor could use it. Could they use it to buy a property? Well, if you've, assuming your turnover is 200k or more, and you've applied for the maximum of 50, you might be able to secure a property in the north of England. If you're further south, though, say London, could you use it to buy a property? Well, you'd probably need some other money. So you either need a big bucket of cash in your shed to use to buy it, or you traditionally would go to a mortgage lender.
Yeah.
Now, this is where it gets interesting, because if I was in my days working in the bank again, and somebody came up to me and said, I'd like to borrow a 75% loan to value. Okay, where's your source of funds? Well, I have this bounce back loan and that's my deposit. They're going to go, what we're going to do is take 50 grand off what we'll lend you because you're not putting any equity in. That is lending. So don't expect to use it for deposits. You still need to put the equity in and expect your mortgages to be pulled down if you do use it as a deposit.
Yeah, absolutely. Yeah, it's essential just so that you've got some skin in the game and things like that. Really, I was speaking to somebody the other day. It was, I suppose, for this one there was no kind of right or wrong answer because at the moment it's still quite early stages. Essentially, where you've got a kind of different companies almost loaning it to a different company and then getting the mortgage in another company. Would you suggest anybody do that? I kind of thought that's a bit too risky for a long-term kind of play. But
yeah, I would look at it from the point of view of, is that within the spirit of what's intended, which is the authorised purpose, to use it for working capital for the business or investment for the business. Now, it certainly wouldn't be working capital if you're lending it from business A to business B.
Yeah.
You could argue it's for investment and economic benefit, but then what is the core raison d'etre of that business in the first place? If the raison d'etre is to make widget and it's your widget company lending the money over, you're not actually using it for the core benefit, the core purpose of that business. Therefore, you'd potentially be in breach of why you've borrowed it.
Yeah.
And you're certainly not refinancing. So it would be tenuous. I would always say play cautious rather than going out and sort of going over the line and sticking your neck on the block. Because if it goes wrong and if you get investigated, that's when you'll be up in front of somebody on a fraud charge or struck off as a director at company's house for fraudulent activity or gross misconduct as a director. I wouldn't recommend it, but that is somebody's personal choice based on their risk return criterion.
I think at some point they're going to have to check a couple of people just to kind of show people that, you know, kind of almost set a precedent to people that are kind of have got these on false pretenses, that they are checking and almost just try and recoup as much as possible. Could you ever see anything like that happening?
If I referred to 2.2 on Starling's agreement, Starling is not obliged to monitor or verify how it's used.
But it's almost not in their interest. You know, they're just it would cost them extra money to do that, and the kind of margins are relatively thin on these loans anyway. So why would they?
Exactly. I mean, they're actually putting in their terms they're not obliged to monitor, and they're pretty much not intending to monitor. But I would not still take it on and breach the terms, because if the worst should happen, if a meteorite hits Britain and your business goes under, I think the key critical bit of monitoring will take place when we have a little bit of a belly flop next year, when people who've deferred their VAT, deferred their income tax, started to have their first C-bills or BBLS loan repayments happening. That's when the economy's cash flow is going to tighten. And I think what we will observe this year is a drop in administrations in businesses, because cash is being pumped in, so businesses can trade through. But I think we'll see a double whammy next year, where those businesses that would ordinarily have failed this year will fail next year, plus next year's cohort 2. And those businesses are the ones that I think will come under intense scrutiny if they've taken loans.
Yeah, absolutely. That makes complete sense, essentially, because at which point you should almost, as a kind of prudent director, business owner, you should think, okay, great, I'm being offered this money, but should I actually take it? Do I need it? Can I actually repay this money? And I suppose if the answer isn't really yes, or at least positive to those questions, then you probably shouldn't be taking the money out.
I would fully agree with that. And on the flip side, I'd also say, talking to a good number of medics who are close friends of mine, one of the things that they do is they are very close in on COVID-19 and what is happening, and announcements and predictions. And they feel that if we release our lockdown too early, that there'll be quite a big second wave. Now, that second wave, if that happens to your business, how is your business going to happen? So the bounce back loan could be used to help you ride a second dip within your business. So you have to be very careful about your ability to repay. You are borrowing money and you have a duty of care. As a director of a business or as a sole trader, you have a duty of care. But if you're a sole trader or a partnership, you don't get the government's guarantee because you're effectively putting in place a personal guarantee and your personal assets are at risk.
Yeah, absolutely. So you touched on the basis of no personal guarantee. So I think there's a video by quite a kind of a well-known property trainer last week about how to structure your business properly to take advantage of these. So essentially, when it comes to not paying them, you're protected. What are your thoughts around that?
Personally, I have seen the video and I have commented on that, and you will see those comments come out later today. I would suggest that person is suggesting you almost commit fraud because you're crossing the line. You are deliberately taking money with the intention of not repaying it. And if that person did it in their business, I believe the book would be thrown at them very, very heavily. And if anybody was to listen to that advice, I believe the book would also be thrown at you. And you get all you deserve if you try and obtain money under false pretenses, as is being employed there.
Yeah, and it would almost be kind of wrongful trading as well, which they probably wouldn't serve as a director for a very long time, at the very least. There.
Absolutely. Yeah, well, you'd be struck off, potential imprisonment, potential fines, barred from a directorship. You just don't want to go there. It would be your world's worst nightmare. If you're an entrepreneurial person, it's the world's worst nightmare. It's stopping you from doing what you're passionate about.
Yeah, absolutely. So what we'll do now is just try and we'll have a look through. So when I was looking through Starling's terms, there were quite a few interesting kind of situations that were classified as a default. And I just thought we'd kind of run through those just to kind of see what you make of them.
That was Schedule 2, wasn't it? I remember those.
I remember them very well. Do you remember number 9?
I remembered it. Well, I thought it was 8. I was doing it on screen with my finger. It might be 8 or 9.
The borrower fails to pay any sum payable by it to HM Revenue and Customs or to any other tax authority. So what are your thoughts on that?
Including an overseas tax authority as well, which, Well, firstly, how is Starling going to know that you've not paid your tax is the first thing. Therefore, is there a dialogue going backwards and forwards between HMRC and Starling? Well, given that there's no direct link, no. Given that Starling has said they're not obliged to monitor and they're going to do as little as they can to monitor, I also find it very hard for that to happen. I think what they're endeavouring to say is, look, we're protecting our loan position here. If your business goes under and you owe tax, you also owe us, and we're effectively trying to rank ourselves as a secured creditor by saying that you've deliberately breached and defaulted. And if we can lift the veil of incorporation, take cash back that you've taken out of the business, we will do that. And this is a clause that would enable them to do so. Yeah,
perfect. Another quite interesting one really was about if you or any director or member is convicted of a crime. So any crime at all, that's quite an interesting one to be a breach of a loan agreement, isn't it?
Well, it was an interesting one because I saw your social media post of your new car and I thought, I hope Josh doesn't speed because that's a crime.
It's so easy to speed in that thing. Honestly, it's too fast. Oh, wow. That's all right. I get a speeding ticket. I've got to repay the loan and I can't drive.
Absolutely. It is a bit harsh, isn't it? Some of the terms that are there. And I almost wonder, have they gone to LEXL and they've taken a loan agreement and they've taken the strictest full-form version of the precedent agreement and gone, leave it all in there.
I suppose at least they're covered. So quite a few other interesting ones. So the borrower used as a loan for any purpose other than the authorised purpose. So we've covered that one. So essentially, if it's not trading, investment or working capital, they've got the right to call the loan in. And they've also kind of safeguarded themselves by saying about how if it's withdrawn by the administrator, or if the borrower ceases to be eligible under the BBLS scheme. So all of these would result in you potentially having to repay the money kind of 14 working days notice.
Yeah, well, I was going to say they do say it's repayable on demand, and again, if you miss instalments, they reserve the right. It was interesting that they're charging interest on a daily basis, and a lot of the other lenders are charging on a monthly or an annual basis. So there's just subtleties between schemes, which, having observed them all, it's interesting.
Yeah, one thing to know about Starling, which is quite odd, is they seem to only allow one application per person. Although technically, from the actual rules of the scheme, it's per group of companies. But for Starling, it seems to be only one per person. Can you see them changing that, or do you think that's just a quirk in their system at the moment?
I think that's a quirk in their system. Having a number of businesses with a number of banking relationships, a lot of these modern challenger banks, they tend to make it difficult for you to have more than one account with them through different businesses. And that's a system point of view where they're effectively locking their app to your phone number. And therefore, if you're trying to log in with another account, hang on, there's duality in their system, so there's conflicts.
Yeah.
So I think that's problematic. I mean, if you and I were in business together and we had a Starling account and we took out a facility, and then you had a relationship with somebody else and I had a relationship with somebody else, we're not a group.
Yeah.
But we want loans for each of the respective businesses. And therefore, it would be restrictive on one of those or two of those businesses as to which ones could apply.
Yeah, so in that case, at the moment, am I correct in thinking the only other bank to go with is HSBC for non-account holders?
It is the only one that is open and accepting that. NatWest, if you apply for an account and open an account, then you can apply. Lloyds were doing it, but have closed their doors to new accounts so they can focus on serving existing clients. So each bank's different and on its merits.
Yeah.
But look, HSBC is the only one that requires no account holders.
Okay. Yes, even with NatWest, I applied for an account with them last Monday, and I've not had anything at all since. Not an email, not a request for more information, and I expect it's going to be that way for a good couple of weeks yet. By which point this whole scheme could be withdrawn.
Yeah, it's a moving feast, and I think it highlights the strengths and weaknesses of different banks, their systems, and their responses to their customers and also their priorities. Now, I mean, I don't wish to say anything that's slanderous, but a number of the banks were not very quick out of the traps with the CBILS. RBS was very fast, but the other banks were not. Now, call me a cynic. If they've been working on this for 6 weeks, they might not have been quick out the traps, because would you, as a lender, want to write an 80% risk on your books, or sorry, the 20% top slice of risk is on your books because the government have taken the low risk element, or would you rather do a 100% loan? And when you look at CBILS versus BBLS, CBILS counts towards their weighted funding risk capital. BBLS is taken out of that, so it doesn't affect their ability to lend.
Yeah.
So there's very subtle differences from a banking point of view. Which would I rather do if I was a bank chief exec? So some lenders, say HSBC, that's opened its doors to every man and his dog, are almost inviting new customers to come to them because they recognize they can write a lot of business very quickly.
Yeah.
And it's guaranteed not to be bad business because they've got somebody giving a guarantee that is copper backed.
Yeah, absolutely. So before we jump onto questions, is there anything else that people need to be mindful of, or that you can share, kind of when applying for it, or just something to be aware of?
I think the common point that I see people coming up with is, can I put that my turnover is 200k or more to get the maximum loan? Well, firstly, look at it from the point of view of, do you genuinely believe your business will, in its forecast, get there if you didn't have full trading period within the requisite window? If it didn't, what would be your reasonable forecast? And don't go any further than your reasonable forecast. The second and most important point is, what is your affordability? Can you afford to repay that money? It's all well and good borrowing money, but you must be able to repay it. If you cannot afford to repay it, do not even consider borrowing it in the first place. It's not good business.
Yeah, absolutely. Although it's a low interest rate, there's still an interest rate there at the end of the day. So it's not free money. You still pay interest on it. So if you can't use it, definitely don't take it out, and especially if you can't afford to repay it. So just have a look now at some
it's
of the
also a repayment mortgage, repayment loan as well. So you're paying interest in capital each month, except in the first 12-month window. So you must make those interest and capital payments every single month. Some people have approached me and gone, can't I just pay all of the 50 grand back if I borrowed the maximum at the end? No, you can't, because what you're doing is you are paying a bit back each month of the principal and the interest.
Yeah, 72 payments. That's essentially kind of what it sets out there. So is the loan based on last year gross or projected gross, as I'm expecting more income this year?
The loan scheme states that it's from the 1st of January to the 31st of December reference period. So if your accounts run from March to March, you need to reflex your numbers to work out your 1st of January to 31st of December figures. If you don't have that full trading period, then it's based on expected. So you need to then do a forecast. I would stick to the rules that are there, or the guidelines that are there that they've put out. If you try and be clever and take out too much and it goes wrong, then you get audited retrospectively. You've made the numbers up. You'll potentially get a slap on the wrist for fraud or worse.
Yeah. Absolutely. So what else we've got through? So we've got somebody who's they're a HMO landlord. They've currently got all the rental property income goes into their own personal account, so unincorporated. Can they apply for a loan, and do they need to set up a business bank account to get one?
Well, the first thing is they're running a business in a personal bank account. Yeah. You should have a business bank account if you're running a business. Certainly don't put your Tesco's grocery shop or other supermarkets exist through the same account. You should be running a business bank account first and foremost. Secondly, do they qualify? Well, can they meet the acid tests that have been put there? And if you look around the various banks, they all have slightly different wording. I mean, Barclays specifically says property businesses can apply, and it lists developers, investors, traders in their terms. So you've almost got to look at which one suits you and the terms that you feel most closely marry your business requirements. Starling, it's pretty open. The co-op is any business that does not appear in this list. So yes, you can qualify, provided that you meet the terms, because you're signing a contract. And if you sign a contract and you clearly don't meet the terms, that's the wrong contract for you.
Yeah, absolutely. So I think that's everything on this. Thank you very much for taking the time to come out. It's been hugely valuable. I'm sure it's going to help a lot of people make sure that they stay on the right side of their loan agreements and don't go using it for kind of things they shouldn't do. So kind of whilst we've been on this, completely unrelated to, kind of related to Bounce Back. So they've announced that they're actually extending the furlough scheme until October now. I think the little notification on my phone said. So what are your kind of thoughts about that?
Yeah, well, that ties in with keeping the lockdown in place for a little longer. My belief is when lockdown is lifted, it won't be everybody's out and everybody can go about normal life. It will be a phased release of different groups of people going back into the working environment and starting again. So that's indicative that lockdown may continue for a period longer. In terms of, I'd also heard rumourage, and actually I listened to an interview, and there was a fraudulent slip there by the person being interviewed, where they actually used the word reduced, and then they quickly backtracked and corrected their wording. And the inference is that the furlough will reduce from 80% downwards. The figure that is being muted to me is 60%.
Yeah.
It may or may not happen, but there was a fraudulent slip by a minister where he used the word reduced and then went backtracked and restated what he was saying. So I think that's likely to be imminent.
Yeah,
and that will be an interesting one for businesses and for for businesses, for employees, for tenants, and for the social housing system, because who can survive on 60% of their income? That would be a challenge if it does reduce to that.
Yeah, I certainly think 60% might be a bit too low to actually have the impact they need. 80%, yeah, quite a lot of people, they can live comfortably within that. That 20% they're losing out on was probably their transportation costs and the cost of their Tesco's meal deal every lunchtime. But 60%, that's probably going to have a knock-on impact and really start to impact the landlords getting paid, paying all their kind of car finance agreements and a lot of the kind of big expenditure around that.
I would agree with you. I mean, I have a team of staff, and I keep in touch with them to see how they are, make sure they're well and everything else. But I also ask questions like, how are things financially? And all of them have said they're actually financially better off. They're doing 2 months to the gallon in the car. They are not buying a coffee when they're filling up at the station for their petrol. They're not taking the children out to the swimming pool and other events. They're not eating out. And they've said they've actually saved up enough in 2 months to actually go on holiday. Now, that tells you just how tough that is for those people. But it's more the social interaction that people, I think, are missing in the lockdown. And, you know, most people can survive on the 80%, and most people will be able to survive on a lower amount, more than likely. But I think terminology used by governments sometimes has been a bit loose. Have a rent holiday. It's not a holiday, it's a deferral. And there should be a catch-up agreement agreed in place before that deferral takes place. So some of the language has not been helpful.
Yeah, absolutely. I've heard of it kind of where, because it's all over the media, landlords getting a rent holiday, mortgage holiday, and then tenants, okay, oh great, they're not paying their mortgage, I'm not paying my rent. And that kind of backwards thinking mentality that's just not really helped anybody.
It doesn't. And if you were to push me on a prediction, I would suggest there is a speed bump coming where quite a few landlords will go into very big financial difficulty as a result of non-payment of rent.
Yeah.
And we might see a few tenants do a midnight flip.
Yeah.
And who can blame them when the inference is government are saying it's a holiday? It implies go away and don't come back.
Yeah, that's it.
It's the wrong inference. So I do hope your listeners are not affected by this, because it's not a good situation.
Yeah, certainly. I definitely agree with that. So perfect. Thank you very much for taking the time. It's been a pleasure. We've got some really great feedback coming through, kind of in terms of getting people's questions answered. Hopefully everybody can take advantage of this scheme where it's appropriate, on the basis that they know exactly what they're doing, read the agreement, and make sure you can repay it.
Totally. And obviously, stay home and stay safe. And I wish everybody well. And I hope everybody's business bounces back as a result of the support they've got and the opportunities ahead. So, all the best. Thank you for the invitation, Joshua. Thank you.